fire up Merck. Folks, I have a PhD in chemistry, so these chemical companies are near and dear to my heart. Go ahead, Paul.
$200 billion company. Let's call it 200 billion. 18 PE. So an X there, but not terrible. Nice profit margin expected with drug companies, 23.4%.
Pillar number 3, revenue growth.
39.5, 39.8, 40, 42, 47. Now here's the interesting thing. It's a check mark. Pharmaceutical companies like acquisitions. This doesn't look like a lot of acquisitions have been made. Maybe they have been, I don't know, but they tend to like acquisitions. So either way, it's still a check mark. Net income, 4.4, 4, 2.4, 6.2, 9.8. Wow. Definite check mark there. Number of shares outstanding, 2.8, 2.56. Another check mark there.
Current assets greater than current liabilities is pillar number 6, y'all.
26.6 billion in current assets, 20.4 in current liabilities. So they have 6 and change in extra cash lying around, which is good.
Free cash flow growth over the past 5 years.
11.3, 8.7, 4.6, 8.3, 10. So check mark for growth.
The average is 8.5.
Times 20.
171.6.
Close. Not there yet, but close. So it is a little expensive based on the free cash flow, a little expensive based on the PE. But if you think there's a lot of growth potential there, that could be justified in this. Nice dividend. I would still be waiting a little bit to buy it. It's already seeing like it's dropping down a little bit. The last year, it was at a peak of 92, down to 81. Down here, I definitely would have been buying. So where am I a buyer at? I don't know. Maybe Mo and I can do some research and look at this one and probably buy at. The thing is, guys, I'm a value investor. I want to buy at a massive discount to what I think the value is. So if I think the value is $70 here, I want to buy it like $40 to $50. I look for companies that are selling well below their actual value. So that's the big thing to understand here. Like I want to buy Merck much lower than this.
Paul, let's look at the momentum here for Merck.
So this is one to watch because the momentum just shifted. So right now it has some negative momentum going, which is fine. You just have to wait for this to go above the 300-day. So that's where it's at right now. Last time it crossed over was in October of 18 at 71, and you would have sold at 78. You'd made a little bit of money. So you'd have bought at 71, it would have gone all the way to 92, and you'd given back profits all the way to 78. That's what this trading does. You lose out on, you don't get the high and the low, you get somewhere in the middle, but it's more consistent.